Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market wrap-up for this Monday, the 17th of July, 2017, and the time 4:55 p.m. Central Daylight Time. So we're waiting now as the markets reopen. As you can see behind me, whenever you get these on the boards, it means that most of the markets are clearing themselves out. They get rid of all the orders in there. You get what the last price was, if you will, the settlements, and then the markets re-go. Different exchanges do it different ways, but this is how the feed that we get from the CME Group on their Globex comes in. So something for you to just always consider. I'm going to do the NASDAQ today, but then I'm going to change this to some of the other indices later on starting tomorrow. I'm just late today, to be honest. In looking at the markets, you've negated that down thrust that we had in the NASDAQ on a weekly chart, and you've moved the market back up. So the market's now got an up thrust at work with a bottom in place at 56.52. You're back to 58.55. So it's a heck of a rally on just looking at the closing charts of that, and that's the closes. When we come to a daily bar chart, you can see how this market is going almost in a vertical method. And take a look at this low. Let's call it, just for the sake of discussion, around 55.60. The market has moved up 300 points without so much as a lower low. You do see that. Each day's had a higher high, not a lower low. So it's a vertical price thrust. We're back into a peak area where the market had trouble before at 58.55, and the all-time high is here at 5,900. Will the market be able to keep going through it? Well, I guess earnings will determine if that's all going to happen, right? And that's going to be the big picture for it. When I put on the brown lines, and this is the chart without it, and this is it with it, this is the swing line. And it's showing you that what you have is a lower low, and as soon as we cross through this high right through here, a higher high. That is not a trend. What we have in place is an up thrust as the market crossed the 18-day average and kept going. We had one challenge in early July, if you'll recall, towards, but didn't hit the 100-day moving average of closes. Now the market's approaching a big resistance point, which is the upper Bollinger Band, which happens to coincide with the all-time highs. Doesn't mean it has to react against it, but logic says that the market, after these many days of a higher high day, that it's in line to do something in the way of backing off. And by the time I'm talking, we'll probably get the openers in here and we'll be able to see what they're doing. As we take a look at the momentum, you're in overbought condition, but in an up thrust. So in summary, you don't have a trend off the swing line. You certainly have upside bias because you're over the 18-day average, and momentum is pointing up, but has entered an overbought status. And if you take a look at how many consecutive higher closes and higher highs you've had, the market's begging for a correction at some point. In the Dow, the market has a pattern of a lower low, then a higher high, and now with this action, I should have taken this arrow and had a point up. You're clearly in an uptrend. You got higher lows and higher highs. That is my error here, so I wanted to get this out just before the opening. You've got slow stochastics in an overbought zone, and the question is, can the market push out that upper Bollinger Band and keep it going? That's going to be the big question. The S&P is similar to the Dow. It's up at the upper Bollinger Band trying to push it out right now. You have higher highs, higher lows. What this market, especially this market, is looking for is earnings from the companies that make it up. And the reason is it's trading at about 18 times earnings. 15 times is more in line with whatever a norm used to be. The market's rich in price, but rich in price doesn't mean you're not at all-time highs. And if you're trying to fight that, no. What do you have on the chart? You got an uptrend on the swing line. You got upside bias because you're over the 18-day average. Momentum is overbought. When you take a look at the Russell, it's knocking on the door of all-time highs. Higher lows, higher highs. Perfect. The market is paying attention to the upper Bollinger Band, as all of these indices are doing. They get up to them, and I'll come back, and you stall against them. I think you can see that. They're not just punching through them and running away on you, and that's very important to take in. The VIX, on the meantime, had a shot here at going down, and on Friday, I think that's the third all-time low close that the markets had in the VIX. It bounced away, but all it did was an inside trading day. Will it embed? It's oversold. If it changes to embedding, then what often happens is the market picks up momentum, as it did here, and it tries to break down. Now, as you'll see, you didn't break down very much when you last embedded in the market. We had one zone back here where we did the same, and it didn't break very much either. So I'm leery that because of the past history of it, that maybe it gets down to those numbers embeds, but it doesn't seem to be going that far. I guess the question is, how far down can it go? Whereas the pops in the market that have been happening, one here, one there, they're strong to the upside. They're not a big break to the downside. When we come over and look at the T-bond market, we still have a pattern of lower highs and lower lows. We had an inside day today. The market has an embedded reading that is flirting with being lost. Now, if it gets lost, and here the market just opened, this is perfect. I didn't hit anything. It was lost right on the opening just now. So, unless this market really comes down again, the odds favor that price and the 18-day average are going to make a run at each other. Let's go back to these stock indices. I don't have an open there yet. We just opened up in the S&P, and as you can see, it's up a half a point, so I can already tell you that the earnings reports that came out weren't all that good. I did not have a chance to look at Netflix's earnings after the bell, but in looking at the opening, they were probably right in line with the analysts we're looking for. I know that in Netflix, they're looking more at the addition of subscribers, but they also understand that this quarter that they reported in is not the strongest of quarters, nor is this one. As we get into the fall season, it definitely starts picking up momentum, but they'll extrapolate from that. Let's get over to what we were looking at. 10-year notes. Markets trading here down a fraction, riding the 18-day average of closes. The swing line is up, higher lows, higher highs, momentum's up, but the market's refusing to close over what I call that line in the sand, the 18-day average of closes. It's a battleground there. And that often happens as prices, when it's over, it falls back to the 18-day average to figure out what to do. As it's rallied back to it, it's the same argument, just a flip-flop of it. In the dollar index, we just don't have a quote coming through at this point, but you have embedded readings. This market is still certainly in the bear camp. It might target this lower Bollinger Band as the market's staying down like this with an embedded reading. No reason not to. When we come to the euro currency, these are new quotes that just came in. You have an embedded reading. That tells me that the pros will likely buy the break until that reading, that red line, closes under 80, and their goal is going to be back up to the 116 level. I saw today that a number of banks were coming out with longer-term buy recommendations in the euro, and they're talking the 112 area. I don't know that you'll get under this Bollinger Band again if it's a true bull market, so it's something to be watched. We'll see if that happens. In the British pound, as you know by now, Brexit talks are formally underway. The market had a heck of a rally recently. It stalled right here. The question is, and what's propelled this market is, what is the Bank of England going to do with monetary policy now that the talks are underway and they see everything? A lot of traders think that the bank is going to raise interest rates. I don't know. It's a pretty hard thing to do when you don't know what the impact's going to be. In the Japanese yen, we get monetary policy this week. The Bank of Japan does meet. We get the European Central Bank meeting this week, so you pay attention to that. Probably not the places to be. I hate trading right in front of central bank meetings because you get either the evening up, filing for position, and then you're at the mercy of the words and whatever comes out. Is it going to be a surprise? Did the market anticipate too much? You don't know. It's just a difficult time, and I try to avoid that. On the crude, we're down a little bit. You have a market that is in overbought territory and correcting. Now, both numbers when it reopened tonight, and I'm going to take it back if I could. Here's the close on Monday, which is when I'm still talking.
You were overbought, and tonight when it reopened, it lost that condition. The trend is up. You have a market with higher lows, higher highs. You don't want to come in and buy, I think, into that 18-day average unless you're willing to play with just so small of a stop. Maybe it's a good trade, but you don't want to see prices under $44.99. If they get under that, then what happens is you get a pattern lost. You'll have a higher high and a lower low at that point. And you got a 67 reading. I'm not saying don't do it, and I'm not saying to do it. I'm pointing out that I do think they'll be buying along the way down here, and if you take out $44.99, that could be the problem. You're getting the embedded reading in the gasoline. Now let's take a look, and let's look at today. Both numbers are over 80. Both numbers are over 80 at the close of business Monday. Both numbers are over 80 at the close of business Friday, and on Thursday they were not. So how I trade something like that is I avoid it. Now you're going to say, why? Today is what makes it embedded. And early on, what markets try to do, at least what I've learned what they try to do, is they try not to embed. And you just don't get embedded that often in most commodities. What about the commodity that you're looking at, gasoline? Well, it's had a real tendency to embed for the past 6 months. So we'll find out. What my tendency is and what I like to do is one thing, but I'm looking at this real hard. Now, if you were to get a big break in the market intraday and the market still holds on to it, that's when I say in my updates at night or in the mornings, hey, folks, I may put out a special update in this market because I recognize that the market's acting a certain way, and why not try to get your foot in for maybe half your position at different times. Everything's up to you, not me. I don't make recommendations here. I tell you how I teach in my charting course and how I tell my subscribers things. In my August natural gas, my daily bar chart here has got a pattern of higher lows, higher highs. You're bullish, momentum's up, you're over the 18-day average. I read that the pros will try to support at 297. They'll probably blow out of their positions if you get under 291.70, and their upper limit is probably towards that 311 area, looking to see if weather will pick everything up. Now, as you can see behind me, and that's where I wanted to get, now the boards look more like you normally see them. And that's real important as you look. But that's how they clean the boards, as I like to call it. You know, let me talk to you about the August issue of Modern Trader magazine. It's out. And there's a whole new look to the magazine, and I love it. Different ways to look at it, and it's Forex. It's earnings. So if you think it's futures, you got it wrong. A lot of people go, does it cover futures? It's everything. And then it comes into great trading methods. And every issue that you get each month is going to contain something different by somebody writing about their interpretation of different matters concerning charts, maybe a new technique that they'll see, what they have found. It's pretty good stuff. Then daily, you get Modern Trader with its modern focus, and market focus is the right word. What market focus is are stories that pertain to today. On the magazine, as you can imagine, when you write it, you got to look forward because you're probably writing your article in July for an August issue, right? Or maybe even June. On the daily information, you're writing it from stuff that came out this morning that you want them to publish or came out yesterday and you think it's got an important point to it. But you're going to find great expertise in this. It is something that I read continually, and it's a $79 value. If you go to them, go to their website, I'd like you to do it and buy it from them. If you'd like to get it through us, it's free. Call us at this number. Go to www.iraepstein.com. It all comes by email from us, by the way. Click it right through here, and you'll see an icon. If you're watching me on YouTube, that's the way to get it. Or under us, click here for Ira's free offers. One thing, it comes with a brand new type of reader. So for your computer, it's really nice. And yes, it has a print function, and you should be able to print this all out. I'm Ira. You have a great day, and you will see me tomorrow. Take care.